On more stuff that won't be in the show.
It's about a 15-minute show right now, Mike, even though we've been on the phone for like an hour and a half. It's about a 15-minute show.
Can I get your why?
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Recorded May 26, 2017. It's The Money Path Podcast, episode 73, with Bob Iacchino and Michael Arnold, founders of Path Trading Partners. Today's What in the Why segment is sponsored by Motive Wave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with a casual conversation on the news and the markets.
I have a question. Is there anything in the book that we have to follow up on?
There's probably a lot of things in the book that we have to follow up on.
I don't have the book, so I can't look in the book.
They're your trades. I assume when you put a book in the trade, you're watching that particular chart. And you're watching that particular
I have so many charts I watch, I lose track of everything.
I'm not criticizing, I'm just giving you an assumption there.
No,
like I know that Intel's off the board. That was April 21st.
Yeah.
That one's off the board. eBay was a double top. Netflix had a horizontal channel breakdown. That one's off the board. Deutsche Bank.
eBay was a potential double top, right?
Yes. Deutsche Bank was a...
How far back was the eBay double top?
Well, not Deutsche Bank. DG. Who's DG?
Dollar General.
Dollar General, target 1 had been reached. Those are all April 21st. There was a Chipotle trendline horizontal channel, close above 434.58. That was April, what would that be, 17th? The prior Friday.
We need to review the book more.
March 24th, CL, crude oil, potential trendline short.
Well,
that one didn't happen. That one's off. It's a close below 47.09.
What's the Dollar General one again?
Dollar General was a close above 434.58.
430.
Stop reduction level is 466.83. I'm sorry, that's Chipotle. My bad. Dollar General was a close above 71.28, but target 1 had already been reached, 73.11.
Yeah, we already reached that, and then did I have a target too?
No.
Okay, so that one's done. Chipotle, which we had a target 2 of essentially 499.
Full target 499.08.
Yeah, last week we hit 499.
So did it get stopped out at all? 395?
No, not anywhere close.
So we got the close above 434.58.
Yes, and we've hit both. I'm calling 499 versus 499.08 hit.
All right, and there's target reached.
Yep. So that can come off.
I mean, there's pages of these things.
Yeah, we need
Caterpillar from March 3rd.
Oh, I need to keep it. What was Caterpillar from March 3rd?
Close below 91. First target 86.25.
Hold on.
I'm sorry. Yeah, first target 86.25.
Close below 91?
Yeah.
All right, that's off the books. That we didn't even get close.
All right.
We need to figure out.
We'll do this offline. We'll go through this.
But it is a MacGuffin.
It is a MacGuffin.
It is a MacGuffin.
MacGuffin the crime dog.
It's not about what's in the book. It's the fact that we have something called the book.
That's McGruff, the crime dog.
McGruff, wasn't he a first baseman for the Tampa Bay Devil Rays?
Why does that dog do crime?
He doesn't. He
McGruff?
prevents crime.
He is a bloodhound. McGruff the crime dog is a bloodhound.
I only remember the Bloodhound Gang from 3-2.
I was just going to say the Bloodhound Gang. I love that show, the Bloodhound Gang.
They had the remote control planes. Did you ever see that episode? Way back. Oh, it was so cool.
McGruff the crime dog episode?
No, it's the Bloodhound Gang. It used to be on PBS.
It came after the Banana Splits and the Great Space Coaster.
I used to love the banana splits. I hated the Great Space Coaster.
2 banana, 3 banana.
If you watch that stuff now on YouTube, it is unwatchable.
No. The Great Space Coaster was terrible.
Get on board.
Lord on the Great Space Coaster. This is a. What was the other one that was? Oh.
You're thinking of the clay guy that lived the dragon that was in the basement. And the guy went woo whoa whoa. Giggle Snort Hotel. Giggle Snort Hotel.
Giggle Snort Hotel.
Giggle Snort Hotel.
That's what you were thinking of with the clay guy that goes rah rah.
BJ and Giggle Snort.
Oh.
I can't remember what I ate for dinner last night, but I can remember that. So there was a lot of news. How has the market fared, both you guys, in the last week?
What, the market that keeps going up?
There was some volatility, right?
One day.
One day. Okay, well, there you go.
The market that keeps going up.
That's all you have to say. And hold on, we got to do the VIX check. VIX $9.90 back to below 10. The unstoppable VIX.
Hey, the Dow is down 0.4% as we speak, Mike.
What? The NASDAQ. Wait. What's the NASDAQ doing? NASDAQ
is
flat.
It's up 0.1%.
What kind of day is this? I think this almost qualifies as a dip right now. Oh, wait, we're down 75 cents in the NASDAQ by the dip.
You know what I have a tremendous fear of?
What?
Not realizing that the old rules don't apply as long as the Fed is involved.
They don't seem to apply.
Well, they certainly have not. And this is a large data set now, right? Since quantitative easing existed, the market just doesn't go down. It hasn't even made a 10% correction. I believe it's made a little bit over 9, but it hasn't reached a full 10. I'm not sure about that, so don't quote me on that. But I have this fear of sitting here as guys who have been doing this 24 and 25 years, right? Sitting here saying, this is wrong, it's got to go down. And while that is still correct, it still goes up. So, what I fear is that people get lulled into this false sense of security. But how false is it when the money they've made trading alongside is real money? It's not false money. So I have this tremendous fear of being one of those guys who's like, this market is stupid, blah, blah, blah. And then years and years go by and you're still saying it. Sort of like the Rick Santelli of the Sky is Falling crew. Or there's a really good YouTube clip of Steve Leisman and Rick Santelli on CNBC constantly argue. And there's a really good YouTube clip where Steve Leisman finally had it. And he goes, Rick, if anyone listened to you over the last 7 years, they would have lost everything. You have been, and he goes, and I was right. He goes, no, every single thing you've said has been wrong. And Steve was actually technically correct. That every time Rick cried foul and panic, it didn't matter because the market still went back up.
Wasn't the bubble burst in the year 2000, the internet bubble, right?
Uh-huh.
Was because everybody, even your next door neighbor, everybody was being programmed to put money into the market because it was just running out of control, and that was the real tipping point when everybody's in it. That normally would not be in the market. That creates a lot of extremely artificial highs. And we're not at that point. I mean, right now, I know lots of people who are not in the market.
Yeah, I think you're right on that. I think the issue is that during the 90s, everybody was crazy with speculation rather than investment.
Right.
People were, they would call it, everybody had a Charles Schwab or E-Trade account, or I don't even remember who was the big platform at that time. And they would go in and they would buy, anything that had .com in their name. And they would make 30% in a day off of basically anything that had .com in their name. Everything, companies without a business, what's the big one, Mike? Was it Pets.com or?
Pets.com.
Pets.com. And there were just a couple of others that had billion-dollar valuations and went down to nothing in a matter of months during that time. So, yeah, there was a speculative bubble at that point. And there was this sort of fever to buy anything that didn't even have a business, as long as it had a .com address. And that obviously sifted out. Yeah, we don't have that kind of a condition right now. We certainly don't. But what we have is we have a stock market that is going up, and rightly so, looking at the last quarter's earnings. Last quarter's earnings were not bad. I would say that they were good, not great, when you do an overall scorecard. But what we don't have is an economy that's doing well. We have a stock market that's doing well. And at some point, those two things have to converge. So it's a matter of, does the economy catch up to the stock market, or does the stock market catch down to the economy? That's the question. And that question's been going on for a while now.
I'm more of a thought that the economy is evolving, and it's not down. It's just going through a transitional phase, with technology being the driving force, whether it's through manufacturing or efficiencies, or new jobs are being created and old jobs are falling by the wayside. That's how I see it. There was an interesting article today talking about, this week, talking about how Microsoft made a handful of billionaires and a lot of millionaires. A company like Amazon made one billionaire, 5 or 6 millionaires, and nobody else. And that's it. Just because their stock was so tightly held. And Facebook seems to be following a little bit closer to the Microsoft model, where a lot of people are sharing in the wealth. But, this particular brand of technology, I'm sure that they said this, when the cotton gin was invented, that all these jobs were going to be lost. We've gone through this before. But what I'm struggling to see is what new jobs get created when there's autonomous trucks that the truck driver can now have. Well, just like the locomotives and the steam engine, you're going to have engineers oiling the gears for the machines.
Yeah, but can a truck driver fix something on an autonomous truck?
No, you'll just have more engineers, highly skilled labor.
No, I understand. But what happens the other? Because they're not old enough yet. Back in the time when we had the Industrial Revolution, people died at 48. I'd be dead 4 years already.
People were working. People were working at 14.
Yeah, exactly. I mean, they were dying earlier, so it was you didn't have to create jobs for those guys. It's what do we do with all the displaced carriage riders? It's well, they're going to die in 3 years. Don't worry about them. But our lifespans are longer. Our skill set is diminished the older we get, and technology moves so fast that how do you get retrained? I don't know.
Well, Zuckerberg came up with it last night in his commencement speech at Harvard.
He said,
everybody should have a guaranteed wage.
Yeah, that's getting pushed now.
He was all over that last. Everybody, you should be able to pursue your dreams, do whatever you want, and not have to necessarily work. So he was touting that at Harvard last night for the commencement. It seems to be the big push of the universal wage that and he was saying that since he had a safety net, he pursued Facebook because he knew if he failed at Facebook, he'd still be fine. So the thing is, well, if you just pay people, they can pursue whether they want to paint, whether they want to play with yo-yos, whether they want to, whatever they want to do,
I hope he realizes he's funding that.
I don't think he came up with it how it was going to be paid for.
It gets paid by him. Companies like Facebook now pay 80% of those kinds of wages, or they're going to.
Yeah, but that goes back to the phrase, idle hands are the devil's work. Me personally, I like challenges. I like, moving forward with a goal. I like the idea of capitalism and succeeding and winning through hard work. I don't like sitting around.
I agree, but to play devil's advocate and kind of take Zuckerberg's side, which before I do this, I'm not on his side, but to just take his side, he's making this assumption that the lack of worry about your electric bill and your food bill will not make people just watch TV and play games. It'll make them say, okay, I'm going to actually try and build a hydroponic garden of organic vegetables and see if I could come up with corn that grows in a day, as opposed to, well, I'm just going to watch Cubs game.
How did you hold on?
I don't know, Mike. I don't ask me. I have no idea. I have absolutely no idea. I'm looking at a banana peel. Maybe that had the color of corn is in the banana peel. The banana was grown.
Out of anything somebody could come up with this day and age, you come up with, I'm going to start a hydroponic garden and figure out how to grow corn in the day.
By the way, for the record, I don't even know what hydroponic means.
It means you grow it in water. Essentially, you put nutrients in the water and the plants grow out of the water. You don't grow them in soil.
Fantastic. Water corn. So someone's going to develop water corn that grows in a day. But I don't think that's what's going to happen. I don't.
No, because if anybody did that, they would have started a business, and now they're selling their hydroponic endeavors.
I didn't see his speech, but I think that's what he's saying. He's saying because he had a safety net, I'm assuming he meant of his parents, Mike?
I assume he was.
He was able to. So, by the way, I know a guy like this on a much smaller scale, and I'm not going to say his name, but his grandfather. Remember in the 70s and a little bit of the 80s, American cars had that strip down the side that when a shopping cart hit it or you hit somebody's door or something, it didn't dent your car? Remember that rubber strip, that like striping almost?
Mm-hmm.
It was meant to look decorative, but it served a function. This guy's grandfather invented that stuff, and he ended up selling it, I believe, to Mopar first, to Chrysler, and then he ended up selling it to the other two of the big three, and he retired, right? He made himself a few $1 million, but a bunch of $1 million. Anyway, what he did rather than spoil his grandkids was he gave them all $100,000 to go toward college or anything else they wanted to do with it. He was pushing college. So my particular friend got a soccer scholarship to a large school in North Carolina. So he got the cash. And in his dorm room, he started basically a form of online banking that he then sold to Chase, right? It was like some sort of online checking system. I don't know what it was. I mean, I could say the name of the company, but it might still exist. And then he sold it for like $26 million when he was like 23 years old. And he bought it back for $17 million when he was like 28, right? And then he sold it again for like $47 million. So he flipped it a couple times. Same company, new technology the second time around. And now he says he travels around and runs marathons and stuff like that. He's like 38 now or something, 35, somewhere around there. That's what Mark Zuckerberg assumes everyone's going to become. But I don't think that Mark Zuckerberg, when he stole Facebook from the twins or created it, whichever one is the real story, I don't think he was looking to make it into a business. I think he just thought it was fun. And so I think he lives in this world where, yeah, everybody does fun things that could turn into a company.
And everybody has access to venture capitalists.
Right. Yeah. I mean, I guess that would be part of it, right? Be part of the universal income, I would think. But the part about it, like at what point does Jeff Bezos, Bill Gates, Warren Buffett, Steve Zuckerberg,
Mark Zuckerberg,
at what point do those guys realize that they're paying all this? They're paying all of it because there's not enough money anywhere else. Mark Zuckerberg ends up no longer being worth, $23 billion or whatever he is. He ends up being worth like $2 billion because the rest of it goes to universal income.
It's interesting because here's some of his speech. Quote, every generation expands its definition of equality. Now it's time for our generation to define a new social contract. We should have a society that measures progress not by economic metrics like GDP, but how many of us have a role we find meaningful. We should explore ideas like universal basic income to make sure everyone has a cushion to try new ideas.
And there again lies the rub. A role we find meaningful. I mean, Stafford's meaningful role might be yo-yo tricks.
It's actual editing. Editing is actually my meaningful role. Yo-yos is a hobby.
It's editing his yo-yo tricks.
Mine might be, throwing a ball for my dog, and I find that useful. But does Mark Zuckerberg find that useful? Do I continue to get my universal basic income if all I do is throw a ball for my dog and drink not your father's root beer by the case?
Well, it's interesting. So as long as we measure progress, like he's saying we shouldn't measure it by GDP. Well, if you don't have any GDP, you're sort of in trouble. Yeah. If your GDP is negative for extended periods of time, because I might join you with playing ball with the dogs, because we're all playing ball with our dogs and Stafford's entertaining us with yo-yo tricks, then we're not going to have much GDP. And
this is sort of the organic creation of the Illuminati, because then these guys will have so much power because they will be distributing the income. Number one. Number two, there'll be a very small market for high-end luxury goods because nobody else will be ever be able to sort of dream to afford these things.
Now, one other thing he said, but if we can develop a strong grassroots movement which says that every man, woman, and child in this country is entitled to a minimum standard of living, is entitled to health care, is entitled to education, and is entitled to housing, then we can succeed.
Welcome to Star Trek. That's the Federation. No money, no poverty, no hunger. Everybody has these terrible, terrible jump suits.
How did the Federation
jumpsuits?
Oh, that's the only downside to this is the outfits.
Oh, I would not want to be the guy with the red jumpsuit because it never ends well. For if you're given a red jumpsuit, you're in trouble.
I mean, I guess the question is, do you take the blue pill or the red pill in this? Do you take the blue pill or do you take the red pill? Because this is the creation of the Matrix.
What's interesting they didn't mention, though? Everybody should get an Apple Watch wearable because in the recent study done by Stanford, the Apple Watch, they compared 6 different ones, like the Fitbit, Microsoft Band, some of these, the Samsung Gear V2, and the Apple was the most accurate one for measuring heart rate.
Love it.
So, Bob, you called that. I think everybody should get a Apple Watch too, universally, so we could all monitor our health better.
I got to get myself one.
So
I don't own one, and I shouldn't talk it up and not own one.
Also, does everybody get a self-driving car then? Where do you draw the line with this? Where do you stop?
Well, it just becomes this kind of funny thing where it's like, everybody needs a transportation, so then transportation essentially gets switched into the free category. I mean, we could do a whole show on this. Yeah. When you look at it, like Uber's become free because the universal basic income allows everybody 10 Uber rides a day or something. I mean, it's just when there's no consumption, when there's no consumption expansion, everything is eventually grinds to a halt. There's no more money being earned by anyone, so there's no more to distribute.
Yeah, I still wondered, Stafford, how did the Federation pay for it?
They just ramped up the replicators. The replicator is the ultimate fiat currency printer.
I'm buying Bitcoin.
Oh, you can't. Do you see where Bitcoin's at? Oh my gosh!
Have you seen the chart of Bitcoin?
It has exploded.
I heard that it exploded, and to be honest, I'm not going to mute on cryptocurrencies anymore. It's now become something serious.
Actually, Bitcoin, if you look at the chart, it looks like every other manic chart I've ever seen. That does not end well. I don't know how it's not going to end well, but And I don't know how high it's going to go before it doesn't end well, but it's not going to end well.
If you bought $100 of Bitcoin in 2010, it's worth $75 million today.
Yep.
So somebody buys $100 in Bitcoin in 2010. When it's worth $125,000, who still keeps it? Everybody in their right mind at that point would go, this can't continue. I'm just going to sell most of this.
Well, you might have kept a little. You wouldn't have kept the whole thing. You would have not. I don't know any, unless they forgot about it.
Taking $100 out.
You would have taken some. You would have taken I guarantee you throughout this time, because it's not gone straight. I mean, it until recently, it didn't start going straight up.
Mm-hmm.
Now it's. I mean, that was at like 2,700. Earlier, it's essentially when this dropped back to the upper 800s just when the SEC said no to the ETF, and then there was the hard fork fears, which I don't know what happened to those, because that can still happen. But it's turned into a speculation now. Japan authorized it for late payments. Now South Korea's piled in. A lot of money's is flying into this in a speculative nature that it can go as high as it's going to go. Don't know where that's going to stop, but at some point, even the volatility that's coming in the last few days. I mean, it's been moving up like $100 in 10 minutes, or down $200 in 15 minutes. It's going. The volatility. Let's put it this way: if there was a VIX on Bitcoin, it would not be below 10. Wow. So we'll have to I have a bunch of Bitcoin stuff in there, which we should get to. But before that, we have to somewhat touch on this, because we talked about self-driving cars and everything, but we've had some things going on in the automotive industry this week. Mm-hmm. We have Ford named a new CEO.
Mm-hmm.
Did you follow that?
I didn't understand it. Yeah, I mean, they named Jim Hackett their CEO. They replaced Mark Fields. I thought Mark Fields was extremely popular. I don't necessarily. So this isn't Mad Money, right? We don't just go, guy's terrific CEO. He's doing a great job. When you don't really know what job he's doing. I mean, it cracks me up when I watch Kramer compliment a CEO. Just doing a great job. He's a great CEO. Really, what does he do every day, Jim? Are you in the office with him, checking how he's like marking out line items and going, whoa, who spent $25 on coffee? It's supposed to be $15. God, he's an idiot. Anyway.
On Mad Money, the cue cards are just Mad Libs.
I mean, it just drives me. This is terrific, CEO. Great job. Doing a great job. Is this somebody who goes to your bed and breakfast every weekend? You idiot. Anyway. Mark Fields seemed very popular to me. I don't know anything else about him. So, like, when they replace a CEO, and everybody's like, this was the right move. I'm not on the board. I have no idea if it was the right move or not. I just know that the Ford family relies on their stock for their income. They still control 40% of the voting shares. So, from what I understand, it was more about the stock not going up, and that's fine. They have the right to do that.
And they really don't have any electric cars happening to compete. GM,
even though they've spent a ton of money on that.
I know.
Oh, no, I'm sorry. Autonomous is what they've
Right.
spent
They really
a
don't
ton
have
of money.
electric car products. GM has the Bolt and stuff like that. So and he tangled with our president and canceled a plant, and Ford had to write off $1 billion or so. I mean, he should have just not gotten on the public stage, Mark Fields.
Well, here's another interesting tie-in. Toyota, the Toyota Research Institute, with the autonomous and electric driving cars, they're going to be putting in different aspects of blockchain technology. Now, what's blockchain technology from?
Crypto.
Yes, it's the thing behind, Ethereum and Bitcoin. So they're trying to bring blockchain technology into the autonomous technologies, where these cars will essentially become a distributed network. This could be actually pretty interesting, where it's a distributed network of autonomous vehicles that are all communicating via this blockchain to to interact. So that it's very fascinating. They say blockchains and distributed ledgers may enable pooling data from vehicle owners, fleet managers, and manufacturers to shorten the time for reaching this goal, thereby bringing forward the safety, efficiency, and convenience benefits of autonomous driving technology. So using the blockchain distributed network to have all this information sort of work together to move towards a common goal.
And blockchain because it's secure.
Yes, and blockchain because it's secure and supposedly unhackable. And with the distributed network, it's not housed in one place, so it sort of evolves as the network evolves. Which I guess we're back to the Federation talk again. we have the Borg. We have the Borg cars. Now, so that's cool. And then we have Fiat Chrysler's now in trouble. U.S. is suing Fiat Chrysler over diesel emissions cheating. So
I have to assume every company does that. I really do.
Looking to possibly fine them as high as $4.6 billion. Now, Volkswagen's, remember, was 14.7. So, but that's pretty big fine still for Fiat Chrysler. They were cheating on the 2014 to 2016 Ram 1500 and Jeep Grand Cherokee vehicles with the 3.0 liter eco-diesel engines. It was only actually 104,000 vehicles in total. So there we have a whole bunch of tie-ins with cars. Oh, and then GM, stock was tumbling after reports that car makers accused of putting defeat devices in its trucks to beat emissions testing. So there you go, Bob. Did everybody do it?
Everybody did it.
Is the GM story about gasoline engines?
No, I don't know if it was. It was their heavy-duty truck. Yes, it seems to be everything's with diesel.
Yeah, diesel's over in America. We called this a while ago. Diesel is over.
Diesel? Is that an official proclamation?
Yeah, diesel is going to zero.
Diesel is now in the going to zero segment.
Going to zero is put in by Stafford. Diesel's going to zero, especially when we get electric Tesla trucks. We won't have any diesel trucks on the road anymore, so it's definitely going to zero.
Well, it will still be used for locomotives that are, they have a diesel engine powering an electric generator.
We're not going to have locomotives in a couple more years. Everything's going to be Hyperloop. You forget.
Love the Hyperloop.
So, and it's going to be all underground, boring Hyperloop with electric propelled spacecraft.
It'd be very cool if the loop train in the city of Chicago was a Hyperloop train. It literally goes in a 10 square block area in an absolute perfect loop. Imagine that flying around in Hyperloop speeds.
Yeah, where you go from one
next stop Lake Street. Next stop Wabash. Next stop Jackson. You're jumping out before the thing starts moving.
So it would take longer for people to get on and off the train than it would to get to the next stop.
There'd be no seating.
You'd just be stay out. How are you? You hang on for dear life?
You step in, grab the pole, turn and step out.
Would have ruined the Blues Brothers movie when Elwood looks out the window and sees the elevated. It would just be a big pipe.
There's so many Chicago things in that movie.
No, but that would go by so fast, and if you left your window open, it would suck you out into the. So, how does this tie in with crude though? Crude big drop yesterday.
Crude surprised me. Crude I was wrong on for sure.
Wait, could you say that again?
No. So here's where I was wrong. I said OPEC's not idiots. There you go.
You give OPEC too much faith.
Well, I have faith that they actually want the price to go up. That's what I have faith in. Because with the Saudi Aramco IPO being slated for sometime next year, would seem to me like they would want the price of oil a little bit higher. They want their profitability up. But there's also an arrogance about the Saudi royal family where, the Crown Prince had recently said how they don't really need oil at all. Their economy's fine without it, blah, blah, blah. They can do, their economy will be fine here. Gave all the data of how their debt to GDP ratio is 3%. Obviously one of the smallest in the world. They announced a couple of weeks ago that basically the OPEC and Russia had agreed to extend the deal 9 months. And then they went ahead and had this meeting, in OPEC in Vienna, which is still ongoing, by the way. Russia needs to chime in still. They haven't arrived. It's an OPEC meeting, but Russia was invited to it. So the Russian oil minister, Novak, I think his name is, hasn't arrived yet. But they just went ahead, and when they made their big announcement, they said, so we're extending the deal 9 months. So the market actually knew about it. So what everybody saw here, if you ever hear us say, buy the rumor, sell the news, or buy the rumor, sell the fact, that's what you just saw in crude oil. A textbook example of that. As the market rallied up in toward the meeting after the news that they'd extended it, and then dropped 5% after the news actually came out. It's really a funny sort of a thing that markets do, where, everybody wants to get ahead of that last push. And then when there's no other news, they sell it almost back down to where it was when the announcement came out. Almost. So apparently the extension didn't make people think that the price would go up. Just the announcement of the extension. And what I said on CNBC this week, where I was dead wrong, is I said, they're not idiots. They made the announcement early about the extension because during the meeting, they're going to make an additional announcement to pile on. They wanted the market moving up when they then made their bullish announcement to move it up even further. And that's where I was wrong, and they did not. And it was on with Grizz, who we did an interview with, and Grizz was right. Grizz said, no, they're just going to announce that, and everyone's going to sell oil, and they did. Now, good thing is that I trade price action, and Mike did not have a buy in crude oil. So I wasn't long it. I didn't get hurt. But this is why we don't trade news.
Well, I did have a trade that we covered on Path Chats, where it did trigger a long trade back on the 18th, and it did hit the first target of the other decreasing trend line around the 51.50 area, and that was the first target. Then it didn't reach the next ones before it reversed. Mm-hmm. So we technically had a long price action trade that hit the first target and then was done. That was a pretty big drop, though. What percentage was that down in a day?
What?
The crude drop from
5%.
Yeah. Seems like it seems to be a trend, though. Like things grind higher, then one day it goes boom. Then it grinds higher.
OPEC has no control over the curve in crude oil. They control 3 to 6 months, and that's it. And that's because anything they do has a direct response. Anything that the cartel does has a direct yet delayed response on shale. So if they're trying to keep market share and they're deciding to pump all out, it drops the front month price, and it'll eventually drop the back month price. But it doesn't necessarily do that because that means shale will scale back and the supply will kind of dry up. They had a better success. They had more success of drying up the production of shale by pumping full out. And there's been all this talk about, shale can now make money at $30 and $26. Those are true, but they're isolated cases. The Dallas Fed put out a report where they surveyed 62 E&P companies in the oil patch, right? That means extraction and production for anyone who doesn't know that. Not services, but extraction and production of crude oil. They surveyed 62 E&P companies, and the mean was $48 to $53. Break even, that sort of magical break even level was $48 to $53. So it wasn't, there were places that went up as high as 100 where they couldn't make money until they wouldn't break even until price was at 100. Well, it wasn't that many of them. But Mike, why is mean better than the average?
Well, mean's the middle, so the average. All right, let's put it this way. Let's say you have a room full of people and a bunch of them earn $10,000 a year, and then you have one guy earning $1 billion a year. Mm-hmm. Like, let's call it 99 earn $10,000 a year, and one guy earns $1 billion a year. Mm-hmm. If you take the average of that, it's going to be nowhere near $10,000. It's going to be, what would it be? What's $1 billion divided by roughly 100? You're going to come up with somewhere around 10 million. Just slightly below 10 million would be the average. The mean would be the middle. So the average can skew things with outliers. Average is very misleading.
Yeah. Even
the mean would be slightly, but the mean would be.
Here, I actually did an actual calculation now. I have 5 cheeseburgers. I have 5 sodas that average 1 calorie, that are 1 calorie each on my menu. And I have 2 cheeseburgers at 1,000 calorie each. My average menu item is 286 calories.
But I'm getting fat going to your restaurant. What's going on?
But the mean is like 998 or something.
Can I get to something that you alluded to earlier?
Well, 1 second, please.
Holding. Now I need the elevator music from the Blues Brothers, you know?
I gotta get a new headset for this computer because one of the earbuds no longer produces sound. And then every once in a while I have to switch them because my ear gets like weird. All right, go ahead. What did I allude to earlier?
No, it was alluded to by Stafford with a prior show tie-in, which I did manage to find.
See?
In the cool tech segment.
This is the article for the callback article.
Yes.
About a golf cart. Elon's golf cart.
Singaporean startup Otsaw Digital has created a 176-pound golf cart-sized automated vehicle with LiDAR sensors and GPS. It can spot unattended bags and differentiate between employees and intruders. If it spots a bag that remains unattended for 5 minutes, for instance, it raises an alarm and marks it for further investigation in case it's something dangerous. If it determines
investigation.
Yeah. Well, hold on. If it determines the person is an intruder, it will send a drone after them up to around 328 feet away.
I love that the picture that you provided, which I'm sure we'll tweet out, has a drone in the background. It's like a full military video. You know, yeah. There's our Otsaw golf cart along with our drone with machine guns in the front of it.
Yeah, it's like RoboCop car. We're getting there.
RoboCop car, Terminator.
Yeah, I like it.
It's so cool.
I like it.
These will be in the front lines in a riot squad. Not cool.
You have to go ruin it for me. Come on, I was all excited. Now you'll probably ruin this too because I'm on Amazon Price Watch. This week we already hit $999 as the high. Right now we're trading $997 essentially. But Bezos, quote, I think we should build a permanent human settlement on one of the poles of the moon. It's time to go back to the moon, but this time stay. His Blue Origin project, which he's funding like to a tune of, how much is he dumping in a year? He's like $1 billion of his personal money a year to Blue Origin. He's working on their suborbital spaceship called New Shepard, which made 5 successful test flights so far, and the New Glenn orbital rocket, which will make use of these Blue Origin's BE-4 rocket engines. So not only is Elon with SpaceX doing all this rocket stuff, we have Bezos, who I think his goal is a little more easily obtainable. I'd probably shoot for the moon first instead of Mars. But,
why the poles?
What?
Why the poles?
Because there could be water there. So you'll most likely have to also live underground, but there could be water there, and it could help with growing things. And the poles, even if you could get water there, you could keep it frozen and then use it thawed out over time. It's pretty interesting. So they're actually looking which vehicle will fly in 2020 for the first time. So the Blue Origin has already lined up its first customers for the New Glenn satellite launch in the early 2020s.
Literally, if you look at a picture of the lunar South Pole, it actually looks like it's an ocean. Well, clearly it's not, but it actually looks like it.
So that's we have Bezos. Now, is the stock going to hit 1,000 today, Bob? We're on Amazon Watch.
I think 1170 is where it needs to go for Bezos to be the richest man in the world.
Oh, okay.
And that's sort of like a dynamic level, given that Microsoft will probably go up too. So 1170, I think, is where it then exponentially beats Microsoft and he becomes the richest guy in the world. Yeah, of course it's going there. I don't know if it's going there today.
No, that's what I need to know.
Yeah, but you tell me. You look at the charts.
$997.75. Still watching it. It might during this podcast hit 1,000. Something that's not going to hit 1,000 anytime soon. Lowe's. Interesting because Home Depot is doing a lot better than Lowe's. Lowe's came out with earnings this week. We had some still interesting earnings this week. Lowe's adjusted earnings per share 103, expected 106. Missed on sales. Net sales $16.86 billion versus $16.95 billion. Comparable sales expected was 2.6. They came in at 1.9, and they gapped pretty big down. Retraced a little of its gap back to prior support becoming resistance. But Home Depot seems to be doing much, much better than Lowe's.
So here's what's funny about Home Depot and Lowe's. I've been looking at this a lot lately, and there's two schools of thought with stocks, right? You buy the best of breed, or you buy the underperformer in a sector that's doing well. So this sector is really doing well. And obviously Lowe's is the underperformer of these two. So in looking at the two, the best of breeds perform better this year. And there's a fundamental reason behind it, I think. Lowe's stores are nicer. They're prettier. And they have a higher rating in terms of like customer satisfaction with women. And then you go into how many women are sort of in the industrial construction market, and there's just not many. So I don't think that you necessarily buy the best of breed or the underperformer just as a blanket strategy. I think you kind of have to look past it, or you just trade price action, which is what we do anyway. But the Home Depot should continue to outperform Lowe's. Home Depot is just so much more of an industrial feel to it. And they get the handyman and the construction guys and more of the commercial last-second purchases. And Lowe's gets more of the decorator type people, and there's just not as many.
Well, we have both by me, and the Home Depot is on the weekends is absolutely packed, and the Lowe's is very easy to navigate.
My mother has been she finished rehabbing a condo, and anytime we'd go, come on, Home Depot's right over here. She'd go, let's go to Lowe's. I like Lowe's better. That's because the floors are painted, the aisles are prettier.
Home Depot is the overalls crowd.
Yeah.
And Lowe's is the skirt crowd.
Right. The overalls crowd does more of that stuff.
I'm always at Home Depot.
I prefer Home Depot.
But
it's mostly for the hot dogs.
Really? You're going to Home Depot for food? I know you.
I'd like to know from some of our listeners if the Home Depot has the hot dogs everywhere, or is that a regional thing? Those Home Depot's hot dogs are good. I'm sorry.
I thought they were independent contractors that generally rented out the space. So
whatever, they're still in Home Depot. That's why I'm curious is that a thing where Home Depot goes, nope, we only do hot dogs here?
No, because at the Home Depot when I lived in Texas, they did. The guy had a huge smoker out there. He was making pulled pork sandwiches and smoked brisket and everything else. And there was a line around the block. When he rolled out the lunch meats, I mean, it was like people were lining up for this stuff.
Those are people you want to feed, those overall guys.
I mean, people go to Home Depot just for this guy's smoked meat selection.
That's good stuff.
So, where people weren't going recently, and this is not for the overall crowd, they weren't going to Tiffany's.
Shocking. Is that still an anti-Trump thing, or is there a different thing going on there?
Is it still an anti-Trump thing for what?
The Tiffany's flagship store was on the same street as Trump Tower, so during the transition, all the security, people weren't going to the Tiffany's store.
No. They reported their sales were up.
Yes, but they've missed. Their stuff is not going in the right direction.
Everybody's sales is always up. It's just whether it's up versus the estimate or not, and that generally means up versus the sector. Right, so the analysts look at a sector and say, okay, this sector is up X percent. How much of that should be Tiffany's?
I just thought that one store was performing better when they thought it wouldn't. I'm only talking that one store.
It might have been.
Well, Tiffany's actually came in with their, I think this was adjusted again, so non-GAAP. They came in at earnings per share at 74 cents versus expectations of 70 cents. But here's the big thing. revenue came in at $899.6 million versus $913.44 million expected. So they missed pretty big on revenue. That's and they didn't grow it as much as estimated. So that's another. I would not be chasing this stock either. Big gap down on that one. I think it's still got farther to fall. It could easily fall down to, it's trading right now at 85. It could easily fall down to the 81.50 area. How about Hewlett Packard?
Go on.
What did they dropped pretty big on when they released. They beat on revenue and they beat on earnings per share. I didn't look into, but they actually dropped from 1958 down to 1838 on their release. Revenue came in at 12.388 or 38 billion versus 11.88 expected, and earnings per share beat by coming in at 40 cents versus 39 expected. But somebody did not like, or a lot of people did not like something they posted because they dropped a good, what is that, 1958 to 18, trading 1840 right now.
Did they guide?
I didn't see what their guidance was.
They may not have. I mean, not everybody does.
I didn't look it up. Let me see HPQ real quick. Because they had to say something negative. They raised guidance. HPQ. Is not HPQ. Why does everybody says it pops, but this drops like a rock?
I have a 7% pop here.
Yeah, but then go look at the chart.
Yeah, let me take a look.
It popped, then dropped. Yeah, they beat it, but markets didn't like something about it.
Yeah, it definitely dropped. It's weird. Why is everybody saying a 7% pop?
I think it gapped up, and then it gapped up.
That's what it did.
8, and then it dropped like a rock.
Yeah, that's what it did. Oh, Kramer cheered them. Kramer cheers HP's Inc. comeback story. Same day that they dropped.
Yeah, that's interesting. I'm wondering, I'd have to go through to see what people didn't really like. Because they looked at the...
However, analysts noted that operating margin was below expectations due to higher operating expenditures, which nullify the impact of better gross margins. Despite HPQ having performed well in the challenging PC market, we remain cautious on further opportunities in the two core businesses. Our FY18 operating margin model remains at the bottom of management's long-term 8 to 10% operating model.
And everything they're doing is non-GAAP related too. They're not releasing any GAAP earnings, which is always a risky sign to me.
Two business models, printer ink and everything else.
Printer ink more expensive than what other liquid is more expensive than printer ink? I mean, that stuff, it's like your printer cartridge runs out and you're like, $50? I could buy a new printer, which is what I started doing.
I buy my printer ink in Bitcoin at $2,700 a coin.
It is. It's insane. Sometimes it's cheaper to just go buy a new printer that comes with the printer ink that's on sale than to buy the printer ink. Now, and this one sort of surprised me. Best Buy, they reported good numbers.
Surprised everybody. The death of bricks and mortar, but yet Best Buy kills it.
Best Buy crushed it.
Yeah.
They shrugged off concerns about the retail apocalypse. I love these articles. So they earned 60 cents a share excluding items. So that's non-GAAP, up 40% year over year on sales of $8.53 billion, up 1% per quarter. Same-store sales rose 1.6%, which is impressive. Analysts expected them to earn 40 cents, so they earned 60 cents. Beat that handily, and sales of $8.28 billion, which they came in at 8.5. So they beat top and bottom line, and they're still forecasting good growth. So they really get trading around $50 $50.45 before they came out, then trading up to $61.95.
Yeah, I mean, I don't know that it's safe to say that Best Buy, for some reason, is going to avoid the retail apocalypse. I just think with something like high-end electronics, when you're going to spend $900 to $4,000, that people want advice. They want to actually be able to go in and say, okay, what does this look like? How big actually is it? There's a subset of people, and unfortunately, I think both you and Stafford fit into that subset of people, where you can read the description of something and know how it's going to work and look. But I think I'm in the majority, where if somebody says to me, you're going to get 450,000 pixels and a 62-inch modular hydroponic, I have to go see it. So
how'd you get into hydroponic? You're mixing your electronics with hydroponics?
It's a water screen. But if you go in, if the economy is picking up and if wages and jobs start to pick up, electronics is always one of the places where people spend money. They upgrade their TV, especially with technology changing and things not having been so good over the last 8 years. That's probably it. And I didn't see it coming. Not like I saw it coming and bought Best Buy. I didn't.
No.
But just looking at it in hindsight, it seems to now make sense, a little bit of sense.
I definitely did not see that coming, and there was no price action. We had a horizontal channel that it could have broken out of, but the gap took care of that. There was no trade.
I think that later on, when we are able to get these sort of Iron Man 3D hologram stuff, where you can go, okay, well, how's this TV going to look? And you swipe your hands and it pops up on your wall. Until then, Best Buy may be okay.
All right. Now, this is a tie-in to a past. Stafford, you've mentioned the subprime auto lender, so has Bob. We've mentioned, and used car prices and everything are starting to drop pretty rapidly with everything coming off these leases. And this is sort of interesting. How do you say Santander is the largest subprime auto lender?
Santander.
Santander?
Santander.
Santander. See,
that's close enough.
They have more than $15 billion in outstanding loans to underqualified buyers with average FICO scores of 595. Now, these people are charged an average APR of 16.2% and an average term of 70 months. I actually think you're paying more in interest than the car.
Wow.
Say the company's name again.
Santander.
Consumer USA Holdings Incorporated. One of the biggest subprime auto finance company, verified income on just 8% of its borrowers whose loans it recently bundled into bonds.
Wow, I should go get a car.
All right. The low level of due diligence on applicants compares with 64% for loans in a recent securitization sold by General Motors Financial Company, AmeriCredit unit. So GM was doing income checks on 64% of its loans. Santander was doing it only at 8%. And then I don't think they really care if you're charging people 16.2% average interest on a term of 70 months and you're planning on repoing the car anyways. But what worries me is doesn't this sound like the subprime housing bubble where we're, the liar loans and everything else, we're just not going to check what you say, and then they're going to bundle it into these bonds? Would you go step a foot near these bonds?
No. Did I send that chart to you, the auto loan delinquencies, Mike?
No.
Right,
maybe you did, and maybe I looked at it.
I'll send it to both of you, and maybe we can post it. It's a little bit of old news now, but I'm going to send it to both of you guys right now, and we can put it up on Twitter. The auto loan delinquencies, what's interesting is that they're not, it's not just the underqualified anymore. And normally that's what it is. You look at the chart I just sent you, the prime 60-day loans are starting to tick up in delinquencies, whereas the subprime 60 days, again, this is a little dated. This is probably a month old. We're coming up in the range of 6% delinquencies. And now the prime are up close to 2.5 now.
I can't feel sorry for any of the players involved in this stuff because you shouldn't buy things you can't afford.
Yep.
Now, my question here, looking at this chart, are the primes really prime?
I don't know what prime would be in that. I have no idea.
Remember that's what started happening with the housing resecuritization, that they were labeling stuff prime, which really wasn't prime. And when you rebundled it, that's when you peeled back what they were actually rebundling and how the labels, they actually started changing the labels because, oh yeah, these people are prime. Well, you didn't verify their income. So they put down that they had fine income, but you didn't actually verify it, so you couldn't put them in the prime category.
Yeah, I don't know.
But we're going to keep witnessing this. I think this is all going to unravel very interesting. The two biggest bubbles now are auto loans and student loans.
Yeah.
Student loans will be deferred crashing for another decade, I think.
Worst ROI of anything on the planet, your college degree.
Well, at this price.
I know, and look, I don't have kids, but you try so I'm not emotionally involved, but you try telling parents, like I've tried telling family members, if I were you, I would do anything I could to get my kid an internship at Google, like at 14.
Yeah, the school of hard knocks, man, because you're going to be out in the real world.
Tell the people at Google, he'll get coffee, he'll mop floors, whatever. He just wants to be in the building, and it's free. I'll pay for him until you guys want him.
And teach him the code.
Yeah, send him to coding classes at night and have him mop floors at Google starting at like 14 or 15. Those are the kids that'll succeed.
Yeah.
They can always go back and get a college degree in English lit later.
Or gender studies.
What was interesting to me when I used to hire a lot of developers,
mm-hmm.
and this isn't not a guarantee, but generally most of the best developers I ever had did not have college degrees. They learned the code, some way, or they taught themselves the code, or they worked through. They learned from other really good coders, and they got jobs. They learned to think outside the box. They weren't like programmed robots.
Think outside the book. Yeah, think outside the book.
One of the guys that runs IT for a major auto company and at their headquarters here in Chicago, in the Chicago suburbs, is a friend of mine. No college and no computer training. He actually was working as a translator at the state of Illinois. And the IT guy quit, and they said, "You're now IT." And he said the only thing he knew how to do at the time was open email. He is 100% self-taught. And now he's head of IT. He's the head guy of IT of a major auto company here in the Chicago suburbs. Their headquarters here in the Chicago suburbs. Going along with that theme.
Yep. So, or you could you're going to drop them off at Google. How about dropping you off at Tesla?
I don't know about that. You don't learn a whole lot of basic business knowledge there.
You don't learn any. You might learn how to do creative finance.
You could do that.
Although I wouldn't.
You could end up working at the Congressional Budget Office.
Well, just on the quick Tesla update for all the Tesla owners out there, you probably got your the new autopilot update that makes it smooth as silk for current models. You upgraded their auto driving technology. That came out this week. But what was interesting is, I wonder how this one's going to play out. SpaceX technician says concerns about tests got him fired, and this is in Los Angeles court right now. He was supposedly a whistleblower at SpaceX, saying that they were, fudging results on some of this stuff and everything else. And he said he went up the chain of command and there, and I guess everybody told him to, no, don't worry about it. And so eventually he got fired. They say he fired him because he was insubordinate in pressing his concerns. He was saying he had nothing to benefit other than he was trying to do the right thing, because he's concerned when you're launching big rockets into space, if you're not really doing all your due diligence and all the proper tests, it could end poorly. So we'll see how that plays out. The Bitcoin trajectory.
Oh my God. So, all right, talk to me like I'm a 10-year-old. Tell me about the new one. I know we'll talk about Bitcoin first. Then I want to hear about the Ethereum.
That's the one I'd be going into. Let me just check where we are right now. Now, what's interesting is when these countries allow, see, in U.S. dollars, one Bitcoin is $23.97 right now. And in some of these other countries, they're trading at premiums. I think in South Korea, it was trading at around 4,000. This is bubbly. This is getting... Bitcoin is trading at 19% premium on Japanese markets as Bitcoin fever takes hold. Japanese volumes are 42 to 50% of the trading volume. So they're really piling in that. Ethereum is also now seeing a strong price rise. Let's see where Ethereum is. Ethereum, CoinDesk Ethereum price. We'll just go with where are we? Oh, here we are. Ethereum price. Got to get the real-time updates. Ooh. Oh, Ethereum is trading 180.52 right now. So that's run up to like a few weeks ago when we were talking about it was like at 40.
So each coin costs 180.52.
Yes, right now.
Can we call them coins? That's an incorrect term, but
they're not really. They don't
things.
Really exist. You don't get, like, if you buy a Bitcoin, you don't actually get a physical coin. It's just
a unit. Is it just?
It's a unit of measurement, because you can buy fractional coins too. So you could buy like 0.1 Bitcoin, which would give you 10%. So if it was trading, let's just say at 2,400 and you bought 0.1, it would cost you $240 instead of 2,400. But we have the chart
when
in
you
there.
type, by the way, when you type buy Ether into your web browser, there's also some unscrupulous things that come up.
You get a knock at the door from the sheriff's department.
So yeah, all these people, I think it's being driven by pure speculation at this point, and it's, with this volatility. If you want to go, if you want to invest, I'd probably go into Ether versus Bitcoin. I'm not saying Bitcoin can't keep going up, but have you seen the chart in the show notes, Bob?
Yeah.
Which we got from Zero Hedge. When you start seeing charts, look at the run up since the hard fork fears.
Yeah.
Have you ever seen any other charts like that?
Yeah, I have.
And what generally happens?
Generally, you go back to the hard fork fears levels.
Yes. So, this is, if you're going to play in the Bitcoin speculation market right now, don't put in anything you can't afford to lose a big chunk of. But this is why we have to keep following this, especially what's really interesting to me more than the Bitcoin price. It's just an amusement at this point, watching how it's being traded. There's a rapid, everybody search for, learn to be a Bitcoin trader, and stuff's everywhere. Like, people are now peddling courses.
Everywhere.
Guaranteed 500% on your money, and you just buy my $99 Learn to be a Bitcoin trader course.
What does it mean to be a cryptocurrency miner?
That means you're actually setting up the computers, because you have to mine the Bitcoin. It's just not created. It's people setting up the computers. There's algorithms that takes a certain amount of time and processing power to actually produce a Bitcoin. And there's a finite number of Bitcoins that will ever be produced over a period of years. And so once it's all mined, there'll be no more produced. And it takes longer and longer to produce. The more Bitcoins that are produced, the longer it takes to produce each additional Bitcoin.
Gotcha. So eventually there'll be no more.
Right.
There are companies now that are making specialty computer hardware with so much horsepower just to mine Bitcoins.
Well, essentially, they're a bunch of GPU processors.
Right. It's all using graphics processors. That's right. NVIDIA.
Yeah, I like that you stuck around.
I did.
See, this is yesterday, 26.40. Now it's 23.92. This is getting pretty volatile. Notable fall yesterday. It saw digital currency lose over $400 in a matter of minutes. You always see this at potential tops. Again, we're not saying it is, because I have no idea where to end, but careful, everybody. Now, anything else you want to talk about? Any other questions you have on Bitcoin or
not
Ethereum?
So far. Nope. I'm creating my account.
You're creating your account?
Yeah.
What are you buying?
I'm going to buy Ether.
Okay, I think Ether's going to see a nice pullback too. It's that Ether is one I might consider on a pullback.
Yeah.
And actually, more people are starting to go into some of these other currencies, cryptocurrencies, rather than Bitcoin. It's just Bitcoin's really got the fever over in the Far East. You want to go to the economy segment?
Sure.
Because we had Fed meeting minutes. We had some, the manufacturing PMI came out 52.5, expected 53. Services PMI came out 54, expected 53.1. So manufacturing missed, services beat. Markets, and these are both market reports. The market's Chris Williamson said PMI is running at a level broadly consistent with the economy growing at 1.5% GDP, which is a little troubling. Wholesale inventories down -3% versus expectations of positive 0.2%. Last was 0.1. Q2 GDP revision lower. I think Goldman cuts their Q2 GDP to 2.8 from 3.0. Bank of America cuts their Q2 GDP from 3.1 to 2.6 and cuts Q1 GDP from 0.7 to 0.5. However, the Q1 GDP reading that came out this morning from the government, their second reading came in at 1.2 versus expectations of 0.9. So those, any comments on that stuff?
Well, the Q1 bump up was interesting to me. The 0.9 to 1.2. It's still a blend of people in the mid 2s to the mid 3s, depending on who you're looking at. And it's just too early to say where Q2 is going to go. I would say that right now the Fed would kind of prefer we didn't get an upward shock of in the high 3s, because I think they kind of want to pause. I don't think they want to do 3 anymore the way things are going. Again, we definitely have a detachment between the stock market and the economy. To me, there's no doubt it's one of the most clear divergences I've seen in 24 years between the two. The stock market is not pulling up the economy on a one-to-one basis. No doubt about it. So I don't expect us to see huge, something with this, how everyone's like, you hear constantly, we should expect 3% GDP. But we have a productivity fall. And if you remember that GDP is production, right? It's gross domestic product, which includes services, but it's what we produce as an economy. When you have productivity falling off, even when you get hires, GDP doesn't go up. So we either need an increased population or a continued increase in productivity, and we've had decreases in productivity. So it will be hard to achieve consistent above 3%. But the productivity question is what I can't really figure out. So just economically speaking, that would be a productivity gain. What you could have is you could have a lack of demand. So we could have like 10 people are producing 8 products because only 8 are being bought. That would show a productivity drop. But if those same 10 people could produce 20 products, then you would see job growth slow with increased demand, but you would see GDP grow up and you'd see productivity go up.
Maybe it's just people aren't as productive because they're on social media all day long.
Could be. I mean, that wouldn't surprise me. That could also be a function of demand if you don't have work to do.
Get your Mark Zuckerberg paycheck and just sit by the pond.
That's all we need. I need a pond.
The cement pond.
That's
cement pond.
That's what you need, though. We didn't mention that. Besides housing, you need housing with a pond.
You get a pond. Housing's a problem.
It was interesting. A couple speakers this week, Brainerd actually said Fed's looking pretty carefully at subprime auto loans. So
there you go.
The Fed's now looking at the subprime auto loans sector. He also said,
Lael Brainerd, you're welcome. You listen to the podcast clearly.
Yeah. They're not seeing much progress on core inflation, though. Harker came out. We don't want to surprise the markets with a balance sheet unwind, which I think they've been talking about the unwind enough that the markets, unless they're ignoring it.
I mean, they basically said they're doing it in the minutes. So
right. Bullard came out last night, repeats Fed's rate hike path may be overly aggressive. Anything that jumped out at you in the minutes?
Yeah, they didn't give a plan, but they basically said we're going to start reducing the balance sheet, and it would be appropriate to do it in this year. And that shocked the market because most people were looking at 2018. But it shocked them. We had the single largest one-day rise in yields in the 10-year note in a month when those minutes came out. And then we gave it all back. So, no.
And they still think everything's transitory, so we'll see about that. One thing, this is a direct quote from the meeting minutes. In addition, it was noted that real estate values were elevated in some sectors of the CRE market, that a sharp decline in such valuations could pose risks to financial stability, and that potential reforms in the housing finance sector could have implications for such valuations. That I thought. They also reported
they want house prices to not go up or down now.
I don't know anymore, but that's why it's just that caught me off guard being in.
We had some really weak housing numbers, and real estate agents will tell you it's because there's no inventory, which is what they always say. Real estate agents never tell you the market's bad. They just say there's either no inventory or they make something up. It's always a strong market to them.
I don't think there's inventory at a certain price point.
That's exactly right. And the new home builders are not building those. They're building things that people can't afford yet.
And just even on the used home market, things around me that come on at a lower price point gone very quickly. Things at a higher price point sit.
Yeah.
Sit for a long time.
Interesting.
Maybe people are getting a little tapped out.
Yeah, it's funny because, again, we've seen the wages have not grown. And one of the things we're starting to see now is consumer credit back toward bubble levels. Not bubble, but back toward the economic crisis levels. Consumer credit had been declining for years. And what I think most people, including myself, had hoped is that lessons had been learned. Right? That lessons had been learned from a perspective of don't build up too much credit. Now, when that credit is building up, you can't really tell until it gets to the point of wages not growing, and then you see if that credit continues to build. And it may not. So it may be a positive in that consumer credit is at highs. That's a negative, right? It's at the financial crisis levels, almost financial crisis levels. But it could be a positive in that it's not going to grow any longer. Like they may be like, okay, I haven't gotten a raise, I haven't done anything, I'm going to slow down here. That to me would be a positive sign.
Well, if you don't leave money on a credit card and don't roll it over or pay it off all the time if you use it on a regular basis, then it's not a problem.
There you have it.
Buy what you can afford.
So we had Merkel this week on cause of German trade surplus, says euro is weak. Is that weak because of the ECB's monetary policy, taking a little shot at the ECB. And then, how do you say this guy's name? Schauble?
Which guy are we talking about?
Schauble. Scheeu.
That's Schauble.
Schauble.
Yeah.
The euro exchange rate is too low for Germany.
That's interesting.
They're going back and forth. And then
when have they ever said that?
Huh?
When have they ever said that?
I know. So that was sort of interesting. Then we have the UK threatened to quit the Brexit talks over the excessive divorce payment demands that they want 100. How much they want if you're leaving, we want
$1 billion.
$1 billion. They're like
£1 billion.
No. I want to know what leverage the EU has.
None.
So how they just go?
Well, what's their leverage? Now you got to stay. Okay. No, we don't.
No.
Germany won't sell their Mercedes or BMWs in London. That's like it.
Yeah, I mean, it's sanctions. That's it.
They should take my response. No. No. That's all they have to keep doing. No, we're not doing it.
They have no leverage.
Prime Minister Theresa May's government has said it will meet its commitments to the EU, but it's questioned how Brussels officials reached at the preliminary estimates of 100 billion euros, and there's just no way. They're like going, Yeah,
European Commission President Jean-Claude Juncker said the UK will have to pay about 50 billion pounds. Well, Luxembourg's prime minister has signaled a figure between 40 million euros and 60 million euros.
This is. I want a ringside seat to this one because this one's going to get good.
This is not going to be over in 2 years. No chance. There's going to be extension after extension.
How? Would they just not let him out ever? Just like say,
I don't know. I don't know. I mean, I guess we could go. I actually know I know a person who has a PhD, a master's in EU studies. I could potentially ask that person to look at the charter, but I don't know. What does it do? You know, somebody with an EU passport tries to come in and they say no. And what do? You call Juncker?
They won't let me in.
They won't let me in. You didn't let him out, right? I can still come here.
It's going to be funny. And then we have, in China-related news, Moody's Investor Service downgraded China's long-term local currency and foreign currency issuer ratings to A1 from AA3 and changed the outlook to stable from negative. So I guess it's now stable that they downgraded them.
They downgraded them, and they're stable versus the new rating, I guess.
Yes, they're stable. That's what I was going to say. I think it was negative based on our old rating, but now since we downgraded them, now they're stable. One of the things, their GDP growth has decelerated in recent years from a peak of 10.6 in 2010 to 6.7 in 2016. So
they're also fixing the fix. China is... they're talking about changes to the way that they calculate the yuan's daily reference rate. They're adding what they call a counter-cyclical factor. Now, what does that mean? I have no idea. But what I do know is that they're trying to reduce volatility in the rate structure and exchange rates. So essentially, it seems to me they're going against the idea of eventually floating their currency. Because if they want to reduce volatility, they want to reduce swings. That's moving against swings that happen with all the other floating currencies.
No, there you have it. They're
going to fix the fixing.
They're fixing the fixing.
Yeah.
And I'm now fixing to want to know what your why is.
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gann, ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com. In 2 hours. Yes, my why is the gold-silver ratio.
Oh, that ties in nicely with my what.
Look at that. Gold-silver ratio. The gold-silver ratio, the 20-year high in the gold-silver ratio is 80.67. The 5-year high is about 80.58. We're at 79.5 as of earlier this morning. Now, if we were to chart it, we'd say that this is now a triple top and the next trip up, which is what we're doing right now because it was also like an 80.37 a few months back. That it's about to explode even higher because that's if we were charting this. But what I'm not sure about is if the gold-silver ratio charts like anything else that we chart, or is it similar to the VIX, where it kind of always reverts to its mean in some way, shape, or form. But if it's going to revert to its mean, the 10-year mean is close to around 52. So what you would be expecting is you'd be expecting silver to outperform gold in any move, whether it be up or down. Now you go to the volatility factors of the two, and you see the volatility of silver just in the month of May. In the month of May, there is a silver VIX, by the way, and there's a gold VIX. And the range from high to low of the silver VIX in May has been 7.06 points. And in gold, it's been 2.12 points. So what does this all tell me? I think markets can fundamentally change, especially when you're looking at something that's a commodity and actually has a physical demand side to it. Like, for example, platinum to gold. Platinum used to be priced on average about $1,000 more than gold on a spread basis. And now it's negative 300. and has been for a while. It has not reverted to its mean of being more valuable than gold, because platinum is not looked upon as a currency like gold is. And a lot of gold's value comes from the idea that if there's a global apocalypse, you can always trade gold to somebody who wants to make a bracelet out of it for hydroponic corn, and to be able to make that trade, right? My why is that markets can change, and to trade mean reversion in situations like this doesn't make a whole lot of sense. I don't necessarily believe in mean reversion at all. The scary thing about mean reversion is that the mean reversion can work for a long period of time. See long-term capital management. You can Google that and read the story about them. But when it doesn't work really, really bad. So stick with price action and avoid these mean reversion things. And we can kind of watch the gold-silver ratio for a while now, but it takes a long time to play out. If silver is to outperform gold, that means there's going to be no geopolitical events. And I think that's also unlikely. So I think the gold-silver ratio has fundamentally changed, and the mean over time is going to reach up closer to where it is now, rather than us going back to the 5 or 10 year mean. And that's it.
That's very complex for my small brain. Well, buy signal in silver. Long trade, long trend line trade.
Trend line trade. You want this in the book?
Oh, it had, well, there's two. We had one trigger on the 22nd, which was earlier this week, and then it's going to trigger, which already hit its first target, and actually the first target is going to trigger a second one.
All right. Well, since that one hit its first target, I'm not putting that in the book, but I'm going to put this in the book.
Fine. It's a close above 17. You didn't need a close at 1731 or better on silver today.
All right.
First target. Let's just go with the one target. Make it easier. 1768.
All right.
Stop would have to go below 1702, so in the upper 16s.
Trend line trade, right?
Yeah.
Where would the stop have to be? Upper 16s?
Upper 16s, like 1698, somewhere around there. I mean, it could be fine-tuned. I'd have it probably 1697.
All right.
So.
In the book.
There we go. That's my what.
That's it. Good show. Thanks for watching.
Now I can take the rest of the day off. Where do I collect my Zuckerberg check from?
I don't know. It's the same place where you trade in your urethrium.
My urethrium?
Your urethria.
It's my Ethereum.
Whatever.
Don't get cranky with me today.
No, I'm not cranky. I feel good.
You feel good?
It's hot as today.
It's only 62 degrees right now.
Dear God, it's hot.
I think we just were experimenting with the money path after hours.
After hours in the money path. My balls are hot.
There's a cut in there that doesn't need cuts.
All right. Thanks, everybody, for listening. We will talk to you guys on the Money Path podcast next week. This is Bob Iacchino saying goodbye.
And this is Mike Arnold saying, oh.